Keeping an eye on Apple today and some new product announcements, quite a few, as it turns out, including a variety of new iPhones, one as large as a 6.5-inch screen, which for the time being would eclipse that of the Galaxy Note that's out, a 6.4-inch screen. But there's a lot more to it. Let's get to read on what he makes of it, market watcher Mark Matson. Mark, what do you think of what you've heard thus far?
Well, look, who doesn't love Apple? They're a $1 trillion company. They make up approximately 4% of the S&P. I got an iPhone. I love it. But look, everybody has to really avoid one thing, is that's falling in love with any one company. Look, fall in love with your wife, not an individual stock. Diversification is always the key. Don't get caught throwing a lot of money on any one company. It's enticing. They're up 33% so far this year. So it's easy to get, really enticed and get sucked in. But you have to stay diversified. We're in over 13,000 stocks. Apple represents about 1/4%. Don't stock pick, no matter how great the company is.
What is interesting, too, when you said that, I mean, if not for Apple and Amazon and Alphabet, Google, and, I'll throw in Facebook, they have disproportionately weighted the run-up we've seen in the NASDAQ, particularly the NASDAQ 100, a popular ETF for those pursuing technology and the like. Do you think too much so, even if it's justified in Apple's case, even if it's justified in Amazon's case, that there's too much reliance on just a few guys?
Well, obviously there isn't when you see a thing like Elon Musk in the car industry smoking pot, on the internet. It's kind of disconcerting. And you never put too much faith in any one person running any one company because you don't know what the future is. How many people put a ton of faith in Enron and WorldCom and even going back a little ways, Kodak? And those companies seem indomitable, like they were going to last forever. And overnight, I'm not saying Apple's going to go bankrupt tomorrow, but what I'm saying is it can happen to anybody, and that's why you diversify. You're betting on one company that's going to supposedly beat the S&P. The S&P historically has been about 11.5%. Don't bet on one stock. You got to diversify. And tech stocks are, as you said, way up this year. Remember tech stock crash, the last one? It was massive, and a lot of people got hurt.
Yeah, you're just going to read my next question here. Do you expect we'll have a repeat of that? The last go-round, it was based on the fact that very few companies had the earnings, even the revenues, to justify it. This time we're told it's different because, well, there are a lot more that fit that bill.
Well, it's really easy for people to get sucked into sectors. Remember, not too long ago, it was gold, the gold sector. And now it's the tech sector because techs are up about 19% so far this year. But academic studies show where the premiums are in micro-cap stocks and small value stocks. And those stocks rarely, if ever, catch the headlines. It's usually pretty reasonable and logical. Don't chase the thing that's up. Everybody knows, sell off a little bit of the thing that's up and buy the thing that's down. And this year, it's emerging markets. It's down about 10% this year. Nobody ever calls me up and says, hey, Mark, is it time to buy more emerging markets? It's always a thing that's up 15%.
Now, you mentioned a lot of those emerging markets, even Hong Kong, for example, as robust as it is in bear market territory. We've been withstanding all of this. Is that going to last?
Well, who knows? One of the questions I got from the producer was, is Apple a short-term buy? No equities, not any equity on the book is a short-term buy. Equities are always a 10 to 20-year hold, and that's what makes it so frustrating for investors. They want the sure thing. I want to buy the thing that's supposedly going to go up 15 or 20% in the next 12 months, and that just, that's playing on the human psyche and the human emotion for wanting fast returns. If you can't stand a 15 or 20% or even 30% drop, you shouldn't be in equities at all because no one can tell you exactly when that's going to happen.
Mark, thank you very, very much. Mark Matson, the Matson Money CEO.